Hey guys, Credible Crypto here with a market update. We're going to talk about Bitcoin in this video update. We're also going to talk about Pepe, Solana, Link, Matic, all the shorts that I'm in basically, plus some of the other meme coins like WIF that we covered in the last update, just to give you guys an update on where I stand with those. So let's go ahead and we'll start in this particular video with Bitcoin. As we know, Bitcoin kind of sets the stage for everything that we do here. It is a leader in the market in terms of macro direction. So we focus on Bitcoin to try and identify the macro direction. And then based on that, we look at our alts. So let's start off with Bitcoin, guys. You will recall that in my last market update, I talked about, of course, we were at resistance, which we are still basically at. It is not that level there. We were at resistance. Let me see if I can find the zones that I'd marked off. Okay, I'll just redraw them. But basically, we were at this resistance, which we are at now. Okay, we're still at it. And we were looking at open interest, and open interest had risen quite significantly. And so I basically said, we're at resistance, open interest is high, therefore I'm looking for a correction. And you'll recall back at these lows, okay, back at these lows where I literally said that I expect that we're going to see a move to the upside at set to 70K, at least 69 to 70K. We were bullish here. I was hoping we were going to get a push into this little green zone. We front ran it just slightly, and we'll talk more about some signs that you could have looked at to notice that we may be front running that zone a little bit later in this video. But we front ran that zone a little bit, meaning we failed to hit that zone. We bounced just above it, and then we saw the relief to the upside of 70K. So thus far, everything going according to expectations. Now, at 70K, I said two things, right? I said, as you move up to 70K, there's two things that you want to look for. This was in a video a couple of weeks ago, probably. Two things you want to look for to understand if this move to the upside is the start of that move to 100K plus, or if this is a rejection zone before another leg down before the move to 100K plus, right? So keep in mind, on the high time frame, macro bullish, as I have been literally since 15K, and I've said that this is some sort of reaccumulation structure that, once complete and once resolved, will lead to the next leg up to $100,000 plus. So the question right now is simply, are we done? Is this the bottom? Or do we have lower to go before we get that sort of impulsive movement to the upside? Okay, so make no mistake, I am, and pretty much always have been, macro bullish since 15K. And we have simply been trying to identify when this correction that we've been in now for some months completes, okay? And so I said two things that you want to look for off of these lows when you get this relief to identify if this is the next leg up or if this is something to be faded. The first is open interest, okay? And going to Velo data, we can take a look at our open interest. The first thing I said is that ideally we're not seeing a rise in open interest on this rise to the upside, okay? Because typically a rise in open interest means an increase in leverage longs, and typically we'd like to see ideally the move up be purely spot based in a perfect world, because that way spot tends to be more sticky. Leverage can get flushed out in either direction. So ideally, we like to see a move up on declining or not rising open interest. That's ideal, okay? I said if we do make a move up to 70K and open interest hits back to this, what I call the danger zone, or this area that we previously broke down from, that's not the best of signs, okay? The second thing that I said that we need to look for is we want to see if we can get an impulsive move off the lows, okay? In my last video update, I said that what we have right here could be identified as a initial, like a leading diagonal, which is like a special unique version of an impulsive move. And then I said this is potentially a second wave and we have a third here, but we didn't yet have 5 waves, right? And so I said until we get those 5 waves, this is still a corrective move to the upside. And since then, okay, so we had 1, 2, 3 legs up. Since then, we've put in potentially a 4th and potentially a 5th wave, okay? This potentially completes a 5-wave impulsive move off of our lows here at 60.4K. If this is indeed an impulsive move off of the lows, then what it implies is that our bottom is now in, okay? And again, this is what the 5-wave impulse looks like, okay? I'm going to show you a couple different scenarios because, again, I can't see the future. I don't know what we have. I'm just working with different potential opportunities based on the PA that develops. And the more confidence that I get in a certain direction, that's how I'll trade. So for now, the idea is, did we front run the green zone? And again, we were looking at this to be some sort of an accumulation, a tap of the green zone. Again, that famous triple tap pattern where we put in a key swing low, deviate below the lows, reclaim, put in a higher low, and then impulse. We were looking for that. Now we front ran the green zone, which made me think maybe we're going to come back down for it. But it's possible that we just saw, and I'll show you this in a second about why I say this, but it's possible that we just saw incredible absorption, meaning buyers absorbing the sells here, that made us fail to actually touch this point, and then we just impulsed a little bit early, okay? And if that's the case, then this was the end of this multi-month long correction, and this little 5-leg move to the upside here could potentially be the start of a much larger 5-leg move to the upside, okay? Back here at 38K, we were able to identify this 5-way move to the upside, which is why I was very bullish here and why I said the bottom is likely in, and which is also why I longed 42K and pretty much held that up to new highs, right? To new highs above 50K plus. Now, over here, this move off the bottom, not quite certain that was impulsive. But this move looks like it may be. Okay, so this is what I was waiting for, clear impulsive price action. We hit that area where we'd expect a rejection. Instead of seeing like a very sharp aggressive rejection, we're chopping around there. Okay, so that's a good sign for bulls. I would have expected a more aggressive rejection. We haven't gotten that yet. And so that's the first good sign, that we have a potential 5-way move off these lows, and also that we're not seeing any major rejection here. The other good sign is that we did get initially a decrease in open interest by about 50%, okay? Open interest went from 175,000 Bitcoin down to 159,000 Bitcoin on our baseline, which is what I consider like the absolute lowest we'd expect to go here, is 148,000 Bitcoin. So we got about halfway there, okay? And that was primarily through a short squeeze to the upside. So that was the next good sign. We've kind of recovered a bit from there, and open interest has risen a bit again back to kind of this, what I call like a danger zone. So there is that, but it was looking good here for a minute as opening interest fell about 50% down, and we had a nice squeeze and we completed 5 ways to the upside, okay? So thus far, looking decent, okay? Now, there is something, and I said I'd touch on this, I got a couple of comments on, so I said I'd touch on this because I'm getting a lot of questions about it, about this giant whale that has come in here, and I've been tweeting about it lately, so if you've been following my tweets, you may have noticed this, but some giant whale that basically stepped in at these highs at about 71K and basically bought nearly $1 billion of leveraged Bitcoin longs, okay? And I was tracking this in real time when it was happening on my Twitter, and so I won't go over that too much. But long story short, you can actually see where Bitcoin orders are filled on this heat map chart. If you guys are interested in getting access to this, link is in my bio, but you can actually see here as orders were getting filled. And what I was able to identify was that some entity had filled at the exact same price level over a number of hours, over 4,000 Bitcoin at a price of around 71,000. That's around $300 million worth of Bitcoin. Okay, and this is Binance Perps. You can also see Binance Spot, but this is Binance Futures, meaning that it's a leverage position. And so following that initial fill of about $330 million of the Bitcoin, that entity, seemingly what I'm assuming is the same entity, because he's getting filled at the same price level across hours of time, which indicates, and again, blocks of bids of about the same size, indicating this is likely one entity. Again, over this period of time, he ended up filling about $700 million worth of Bitcoin longs, okay? So open interest, as you can see, rose significantly after the initial squeeze here because some entity basically loaded up on nearly $1 billion worth of Bitcoin longs, okay? Now, this can mean two things. The first thing can mean is maybe this is an entity that has some insider information, that maybe knows something that we don't, that's essentially placing a very, very big bet on Bitcoin going up from $71,000. It's also possible that this entity may be someone who's not very familiar with the markets, new to the space. A lot of people initially think when they see something like this guy knows something, he must be on the right track. If he's placing a bet of nearly $1 billion, clearly he knows better than I do. Therefore, we're probably headed up from here. Okay, and I understand that because initially that is the way that I used to think about these things as well. But in my 7 years of this space, I have seen whales step in with hundreds of millions of dollars and then get hunted and literally puke those positions lower and take a loss. So it's not enough to say that because the position is large, the direction that this guy is betting on is necessarily 100% the right direction to bet on at this particular moment in time. I just want to make that clear. Now, what we've seen thus far, when these whales, these big positions are taken, two things happen, right? One, either they successfully enter and they're right about the direction of the market and the market goes up, and then they eventually close somewhere way higher for a profit. That's the first outcome. The second is that these players jump in maybe a bit too aggressively, and because of price going against their position, at some point when price goes against them enough, they puke those positions, meaning they cut their losses, they take the loss, and they are forced to close their position. Now, someone asked me, what are the implications of something like this? So I'm going to explain it to you. I will also add one more little tidbit. You see all these bids here that we previously had, all these chunks of bids that we had below price that kind of never got filled, right? They were essentially below price this entire time and never really got filled. They all disappeared when that entity filled his 4,000 plus Bitcoin of bids here. So it's almost coincidental that these bids were pulled when these bids were filled. It makes me think this might be the same entity that was chasing price with limit bids this entire consolidation and eventually got fed up of not getting filled and just said, F it, let me just jump in, and jumped in at the top, okay? Now, what are the implications of this particular entity? Why does it matter, right? So the idea is that if you have an entity that has filled $1 billion worth of Bitcoin longs in this region here, he's either going to sell them at a profit above us, which is going to induce some sell pressure when he eventually decides to sell the position and take profits. Or if price works against him and we push far down enough, he may be forced to sell at a loss. And whenever he sells that $1 billion worth of Bitcoin that he is leveraged long on, that sell pressure could force price down lower and cause some level of liquidations. And therefore, that could lead to a liquidation flush. Okay, that's why it's significant, because if this player, if price can go low enough to force this player out, it could force him to market sell his $1 billion worth of Bitcoin on leverage, and that could cause price to puke even further. That's why it's relevant, okay? Now, we don't know what this individual, the amount of leverage this individual is using. We don't know how much collateral he has backing his position. We don't know any of this stuff, okay? So for all we know, this guy has very deep pockets and he can weather a 10 to 15% drawdown no problem, and he may never puke this position, right? We don't know that. And I will tell you from my experience, I have seen it go both ways. I just seen just literally this year, there was an entity on BitMEX that longed, I can't remember the exact number, but it was, I want to say at least $30 to $40 million of Bitcoin, obviously a lot smaller than close to $1 billion, but I can't remember the number, but he longed a bunch of Bitcoin, price ended up moving up, and he closed out for a very hefty profit, some thousands of dollars higher. Prior to that, there was an individual, I can't remember again on what exchange this was, Bitfinex or Deribit, that ended up market buying a bunch of Bitcoin at the highs. Price moved against him. He was forced to sell and take a loss at the lows. So I've seen it work both ways, okay? It's just being aware of this going on, because if price were to move down against this player enough and he were to puke, it could cause some volatility to the downside. Otherwise, he's going to weather the storm and he's going to ride it up to take profit. That's obviously the guy's plan, right? Now, where are we at in terms of price action? I just want to talk about that because I had some individuals on Twitter that were asking me about it. But where are we at now with this impulsive movement? I'm going to outline a couple of scenarios here. I'm going to outline a scenario that I find to be most favorable. I'm going to outline a couple of other scenarios that I don't necessarily think are my primary, but that are still viable. Again, I can't see the future, so I just share with you guys what I think can happen. And when we get ideal entries or areas where we can actually take a trade, that is where I take action, right? There may be 3 scenarios that can pan out right now. Until I can narrow it down, I won't take action. If I can narrow it down and we get a potential entry where I have a clear validation, I will take a trade based on that. But for now, what I'm seeing here is potentially a 5-way move to the upside, okay? I'm also seeing a potential accumulation base. Let me talk about real quick why I say that this was clear accumulation and why we can, when we see this sort of a smaller range, I'm going to hide the bigger range for a second. When we see a smaller range here and we have these sort of key points that we're looking at a key swing low, a lower low, a deviation, and then a higher low. This is what we call accumulation base, okay? And oftentimes they mark bottoms before some sort of a significant rally, okay? Sometimes that rally gets above the highs of the range and then falters and we come back down. Sometimes that rally gets above the highs of the range, we pull back and then continue back up. But in most cases, this is a sign of accumulation, okay? And how can we verify that Bitcoin is being accumulated at these levels? Let's get a quick look at Velo data, and we can actually go ahead and take a look at our CVD here, okay? And this is what I want to show you guys, how you can tell that we're seeing accumulation here. Again, let me go ahead and mark off the zone here that we're talking about. Okay, we have this right here, okay? If this is an accumulation base, what we want to see is we want to see absorption at these lows, meaning we want to see buyers stepping in to buy a Bitcoin at these lows. Okay, I want to point to you guys specifically what we have here is spot buying. We want to see spot absorption specifically, right? So I'm going to go ahead, and this is the combination of Binance and Coinbase spot cumulative volume delta. Basically what this means is when people are market selling on Binance and Coinbase, this thing goes down. When people are market buying, it goes up. And what we can tell from looking at this along with price here is that we can see that we made a lower low on price between this low and this low, which is fine, okay? That is logical. If you have spot sellers market selling, then price is expected to go lower, right? Imagine if you market bought, you can see you market bought 6,000 Bitcoin, but then you market sold 12,000 Bitcoin, you'd expect price to go lower because you bought 6,000 Bitcoin, you sold 12,000, price should go lower, right? What happened here though, and this is where the important part comes in, you have another low and another low. Okay, this time, and this is what's key here, this time, what do we see here on cumulative volume delta? Okay, what we see here is a divergence. We see, once again, you have between this low and this high, you have 4,000 Bitcoin to 8,000. I'm looking at this right axis. You have 4,000 Bitcoin market bought. Price went up, okay? Following that, you went from 8,000 Bitcoin down to 0. So you had 4,000 Bitcoin market bought, which led to this price rise. You then had 8,000 Bitcoin, twice as much market sold. And what did price do? Made a higher low. How can price make a higher low if you bought 4,000 Bitcoin here and sold 8,000 Bitcoin? What does that tell us? That tells us that someone was buying up the Bitcoin into this zone. They were absorbing the market sells. That is what I mean by absorption or accumulation. That is how we know that there was an entity absorbing this sell pressure from the market sells with limit bids, okay, meaning bids in the order book. And that is why we made a higher low here despite more sell pressure than we had on this move down than buy pressure that we had on the move before it up. And when we see that sort of absorption, it tells us that you're seeing absorption here, therefore accumulation within this base, therefore price is expected to go up. So that is, again, another reason why I was bullish at these lows and looking for another leg higher. I would have hoped we went a slightly bit lower. I would have filled some longs if we did. Unfortunately, we didn't because of the absorption. Someone was absorbing all the Bitcoin at these lows, preventing us from actually hitting the ideal little level, just a couple $100 below. And then we went to the upside because sell pressure couldn't handle the amount of buyer absorption here, okay? So that is the idea that we have here with Bitcoin and absorption, right? Now, going back to the chart here, we've identified that we have accumulation going on here. And now what we're seeing is, okay, if that is the case, and we are getting accumulation at these levels, and we now have a 5-wave trending move to the upside here, well then there's a good chance, okay, that the low is in at this low here at 60.2K, okay? And there's a couple of, I'm going to show you bullish and bearish scenarios here because, again, I can't see the future, and we can still go both ways. I'm going to show you which one I lean to, but there's 3 scenarios here that I think are viable, okay? The first is the bearish one, which at this time I don't think it's the most likely, okay? But the first one is that you have just a 3-legged ABC to the upside, okay? In the same way that this little move is 5 legs up, what we want for a proper uptrend is we want 5 legs up on a bigger scale, okay? An uptrend can be on a smaller time frame, it can be on a bigger time frame. We're looking to confirm a bigger time frame uptrend, okay? As the start of the next $30,000 to $40,000 move to the upside. So thus far on the higher time frames, we have 3 legs up. We don't have 5 yet, okay? We have 3. And this one is questionable. We don't even know if this is an impulse. But what we do know is that if this is a valid impulse right here, then we shouldn't go below 60.2K. So in the bearish scenario, we have a 3-legged move up and this is corrective, and we will then come back down, okay, and potentially break these lows. That's the bearish scenario. Right now, I don't think that that's the most likely scenario at play here, okay? The other scenario, which is this is going to be the bullish scenario, is that we officially have our first impulse off of these lows for that essentially means this is the start of the move to 100K plus, okay? And if that is the case, then this Low is our bottom. That's the local invalidation, and we should put in some sort of higher low here before seeing another impulse to move to the upside. And we'll just take off at that point, okay? This is the bullish scenario. The final scenario, which is a little bit in between both of these, is one in which this is a three-legged move to the upside. Still corrective, but our low is still in, and we're instead of impulsing right away, though, we're going to consolidate a bit more in what could be a triangle-like structure, or basically further consolidation, a tightening wedge essentially, before we get the real impulse or the real aggressive moves to the upside. Okay, this is kind of the neutral yet still bullish scenario. And in this scenario, it's highly likely that we come down to about 62 to 63K. Okay, in this scenario, which is kind of the middle ground, it's highly likely that we are going to test this region here. Okay, this blue region here between 62 to 63K. Okay, that's in this scenario where we are still, the bottom is still probably in, but we're going to consolidate more before ramping up. Okay, out of the three scenarios that I've just shared, the bearish one I find to be at this point in time the most, I should say the least likely, just because of this clear impulsive movement, this clear accumulation base that's formed, and the absorption that we can see here. Now that we have 5 legs complete and without an aggressive rejection off of this zone, I'm more comfortable in saying, okay, it's possible that we've now started that major leg to the upside. In that case, dips are obviously for buying. Okay, the most likely scenario is either one of these two, either that this was the first impulse and that we're now going to consolidate and go for the next impulse, or that this was a three-legged move, but we're going to tightly wind up and then impulse. These to me are the most likely scenarios, meaning more likely than not, I think that if we're not already bottomed, I should say more likely than not, I think that if we get a dip to 62 to 63K, that may be our new higher low, okay? Because in two of these scenarios, this will be the new higher low. Only in one scenario do we break below 60K. And in that one scenario, which is the more bearish one, we'll need some significant liquidations to push us below this level, considering all the spot absorption that we've seen here. So that to me right now stands as the least likely scenario right now, okay? Of the two bullish scenarios, again, this one I prefer a little bit more. Why? Because typically the tighter that we consolidate, the more that volatility kind of compresses, the more aggressive the breakout is. And again, I'm looking for nothing shy of spectacular on this next leg up, right? I'm looking for a move that's going to make this move look small in comparison, right? We're looking at, again, only more parabolic, more aggressive, more vertical moves as we move up. So the tighter that we can consolidate, the more that we can kind of build this spring, the better it is for that sort of a very aggressive move to the upside. So I prefer this scenario where we kind of consolidate for maybe a couple more weeks, but hold the 62 to 63K region and then get a very aggressive impulse to the upside. Now, I don't always get what I want, right? So the other alternative, again, is that we are going to take off from here without getting this test of 62 to 63K, okay? And the wild card in all of this is that entity with $1 billion of Bitcoin longs, because if he pukes, then we will most likely are going to get this push into 62 to 62. But if that entity, whoever that entity is, can avoid or can handle a 10% drawdown, then there's a chance he's not going to puke his position, and we may not get as deep of a push down because we're not going to have that liquidation, right? His puking of his position is essentially a liquidation of $1 billion of levered Bitcoin, which could certainly push us into 60 to 62K. Without that there, it's going to be tougher, I think, to get us down to those levels. So it's a little bit of a wild card. We don't know if we're going to get that or not. But let me show you what the alternate is, right? In the very bullish scenario where we don't retest 62 to 63K, where we don't get that nice consolidation, and we said we're more aggressive here, in that very bullish scenario, there's a chance that this marks our bottom, this level here at 66K, okay? In that scenario, we hold here, probably make a higher high, and then make a higher low here, and then just continue very aggressively. Some of you may recall that we had something similar to that back here at 51K, where I essentially talked about how there's this ultra bull scenario, if you remember from my YouTube videos, where I said we're just going to keep aggressively pumping here, and we got exactly that. So at that time, I was very bullish, long the crap out of Bitcoin here, and caught this very beautiful move. And we had basically not much in the way of pullbacks at all, right? that is what this type of scenario is, where we actually hold these lows and we're seeing essentially what is an extended fifth wave here. So that fifth wave that I've basically marked off here kind of extends here and just gets very aggressive. And in that case, the leg up we have here is the first leg of 5 of a larger fifth, okay? And that is what is the most bullish scenario. We don't even get this pullback to 62 to 63K, okay? So these are the scenarios that I'm seeing there. Now, we'll talk about how this relates to alts in a second, because as you know, I am short, significantly short on quite a few alts. So obviously, a very bullish Bitcoin or something like this is something that I'm being mindful of. My thesis for shorting the alts was that if Bitcoin was going to reject at 70K and was going to get another leg down, alts were going to get hit harder, right? Which is why I specifically targeted Solana, Link, and Matic, alts that look bearish against not just the USD pairings, but the Bitcoin pairings. Again, remember, Doge never hit my short zone, so I haven't shorted Doge, and I actually was low time frame bullish on WIF in my last update. So we'll go over that here in a second, but this matters to me because of how I'm positioned, right? Now, obviously, if Bitcoin does manage to get a flush into this zone, I'm interested in longing Bitcoin here. But I'm not interested in longing Bitcoin at resistance. You could potentially take a long here if you want to. It's not something that I'll probably do unless I get some sort of further confirmation, but this is an idea. I'm not going to take this because I'm not fully convinced that we're getting this super bullish scenario. If we get something like this and we reclaim that resistance level that I've been talking about, and I see some sort of a low time frame impulse, I may jump into an aggressive long. But for now, I'm going to hold off on a Bitcoin long. I think that there's a non-zero chance that guy is going to puke his position. And on the lowest of low time frames, I'm not necessarily seeing like the most convincing PA at the moment, right? If we reclaim the red zone and start flipping bullish market structure on low time frames, then I might change my mind. But right now, I'm still not fully convinced, okay? So I'm interested in longs at 62 to 63K. We may not get that, but that's where I'm interested in doing business, okay? We have clear invalidation at this low. Again, out of the three scenarios, 2 of them end with us with this being our low. So this is a clear invalidation on a push down to 62 to 63K. That gives me a very tight long with a very logical stop loss and a target that's significantly higher. Okay, so that's the kind of stuff that I look for here. Now let's go on to alts. We've talked about Bitcoin. We've talked about 3 scenarios. We've talked about what I think is the most logical and what I think is the least likely. All 3 are viable thus far. As more PA develops, we can start eliminating one scenario or another, but right now they're all on the table. Let's go ahead and take a look at alts and how that relates to this right here. So we will start with let's go with WIF. Okay, this is going to be the first alt that we'll talk about, and just going off of my last video on it. So in my last video update, which was shared not too long ago, we were down actually below here, right? And I specifically said that I'm not interested in shorting WIF at these levels. In fact, I said I think it's quite likely that this could be a fake out to the downside and we reclaim this and pump to take all these highs up to these highs here at 385, right? That is thus far what we seem to be doing. And it seems like I'm right about that. We'll know, of course, as PA develops, but it looks like that's probably what we're doing here. In other words, it looks like WIF is probably going to head back to these highs as I was expecting. So technically I'm low time frame bullish on WIF here. When we get to these highs, I will not blindly short because again, looking at Bitcoin and the way it is right now, I'm not interested in blind shorting anymore. Okay, so when WIF gets to 385, we'll reassess. Again, if you recall from one of the charts I shared on Twitter, I basically said I want to see a move to the upside to take all these untapped highs, and then I'll look to short this here for a move down. Okay, that is the idea still, but I want to see some sort of a confirmation when we get above these highs to consider a short. Otherwise, I'm not going to short WIF here into this strength. Okay, I want to see some sort of a trigger. The same way that I look for an entry on Bitcoin with an invalidation, I'm looking for something here as well. Okay, so that is WIF, and we'll assess as PA develops. Right now, I think if we can obviously hold these lows, then we're going to head up to at least 385, and at that point, we'll assess and see how things look. Let's now move on to, you know what, I want to actually add one more thing before I move on. For WIF, if we get up to these highs and we don't get a short trigger, okay, this chart is not showing me enough price action, so I need to switch to one that has more price data. But this is the high time frame WIF chart, okay. if we get to these highs that I marked off, and we don't get a short trigger and instead we look bullish, okay, there is a chance that we're going to get another leg to the upside. Okay, this, as you can see, the leg off the bottom is a first impulse, second wave. I've been counting this as a third here, a fourth, and a fifth, but it's possible that the third completed here and we're working on a fourth before a fifth. Okay, if this is to happen, it means new highs on whiff. Okay, so congrats all you people with hats. It means new highs on whiff, which is why I'm not going to blindly short here. I want to see how price reacts. But the key to remember is that even if a new high is made on whiff here above 489, I'm not sure how high that will go. But the key to remember is that if we do make a new high on whiff, okay, it simply means that the big correction that I was looking for has been essentially postponed. It's not gone away. It's not never coming. It just means that we're a little bit early and we have another leg to the upside to go to complete a proper 5-wave move before that larger correction occurs. So if I go to like the 3-day time frame here on our side, you can see we had a bearish divergence between these two highs and that led to a correction. We've sort of flatlined out. This chart doesn't have enough price history for me to see the weekly RSI, unfortunately. But another high, above this level doesn't change the fact that we're leaving behind a bunch of basically untapped lows that eventually at some point are likely to get taken. Okay, what it does mean is that we're probably in a fourth wave consolidation and we're going to get a fifth wave impulse. And if that were to happen, it just means that massive correction that I was expecting here may happen a bit further down the road. And again, that's going to look like something like this. Okay, so we'll see how price reacts at the highs. There's a reason that I have specific levels at which I want to short these coins, because if I am wrong, those levels offer me clear levels of invalidation and I won't be too offsides if I'm wrong, which is why I'm not shorting whiff here, why I'm actually a low time frame bullish, and why previously when I did short whiff here, I closed my shorts and took profits, right? So that's whiff. We'll now move on to the next coin here, which is going to be Solana. So Solana, I am still in the Solana short. This squiggle was from my last video update that I shared again not too long ago. Short was entered at 169. Okay, so we are about 5% away from my short entry, 5% away from the entry. Nothing has really happened here. We have gotten above the range. I was looking for a deviation. We're currently trading right above it. Solana Bitcoin, which is the other chart that I was looking at, has rejected from the area where I expected rejection, but we didn't quite push up into the kind of the apex of this rejection zone. So there's like a chance that we potentially make another leg higher into this zone and then reject, something like that. Yeah, not much has really changed in terms of the short position. I will say that I'm more mindful of the short because of again, the scenarios outlined on Bitcoin, but nothing has really made me, change my stance on it yet. I think the green zone, as I previously pointed out in a tweet on Twitter, the green zone is an area where we may see a bounce. So if Solana is more bullish than I've thought, or if Bitcoin is more bullish than I've thought, and we're not going to get a big meltdown, then we may bounce that green. And so that's a logical area to consider taking profits on shorts if you want to wait for further confirmation. But yeah, not much really to update on Solana at the moment. We're just watching to see how PA develops. And again, if Bitcoin sees that meltdown to 62 to 63K, that's a 10% drop to the downside. A coin like Solana that's bearish against the Bitcoin pairing will see at least 10% to the downside, likely 14 to 15%. That brings us to the green zone. Again, that's our first area where we could expect some sort of a bounce if Bitcoin holds that 62 to 63K zone. Let's now move on to Matic, which is the other coin that I'm short on. And Matic is also literally like at my entry. It's like a percent higher than my entry. This was my entry here at 72 cents. We're at 72.9 cents. So we're basically at the entry right now. Same idea with Matic here. Now Matic, again, same idea where we have this area of interest where we may see a bounce, that green zone there. And so again, same idea. If Bitcoin melts to 62 to 63 and we're not down here yet, if we simply end up right here, that's when I take aggressive or take early profits, I should say. So again, when Bitcoin hits 62 to 63K, it depends on what these alts look like at that time. Because if I think that might be a local bottom, if I think that there's a 70% chance based on the scenarios that I showed you guys that is going to be our local bottom, then wherever these alts are at, at that time, I may consider taking profit, okay? That doesn't mean that these alts won't eventually see these levels, because keep in mind, something like Matic, despite this being local resistance, has a much more significant area of resistance up here that we haven't yet tested, okay? So if I take early profits, it's not that I necessarily think that we're not going to hit this zone eventually. It's more so that I think that it's certainly possible that we've seen a local bottom, and that we may move up and may test a more significant level of resistance where I have another opportunity to potentially short Matic down if conditions seem like it makes sense to do so there, right? So you have to be fluid with these positions, as I am, and I will constantly be updating my outlook on these things as price action develops, because that's all I can do. But I like to be positioned, and if I think that I'm getting to a point where the risk is increasing and it no longer makes sense to be short on these coins, then I may take profit early and look for another opportunity. And even Matic, I've shorted this thing a few times now. If you guys follow me on Twitter, you'll know that I shorted Matic. I believe it was at these highs, took profit down here, reshorted here, closed it here because I thought we were going to go up. We bounced, and now I'm short again. So it's constantly an ever-evolving game. But zooming out for Matic on the higher time frame, because we always want to keep the macro in perspective. Again, Matic looks like this as well, and there's a few different ways that you can count this, and one of them is something like this, where again, we look for 5-wave segments to the upside, 5-wave moves to the upside to complete any sort of cycle. So with Matic, I'm not sure if this is complete price history, but considering this is 0.02 of a penny, I think it is. You can see we have 1, 2, 3 legs up, and this is a fourth, potentially a fourth leg before a fifth here, right? And you can see here that thus far we have a low, a high, a higher low, a lower high, a higher low. We could be forming a fourth wave triangle here, which means that we could break impulsively from this. So that's also something that I'm mindful of being in these shorts, and I will be quick to pivot if needed, if things start to look like, we're not going to get a pushback into the green zone. Now, again, green zone is my take profit, and we'll touch on this again in a second on why I've been targeting a lot of these lows and a lot of these alts. Again, key area of demand. We've tapped it once, but I was looking for a proper base to form. Again, what that looks like on something like Matic, when I say a proper base to form, is that same thing that we've seen on Bitcoin, right? We're looking for a low to be put in. We're looking for a deviation. We're then looking for absorption or accumulation on a retest and a higher low, and then expansion. So that's essentially what I'm shorting here, is I'm shorting into that formation, and that's what I'm looking for, and that's ideally what we get, okay? So keeping in mind where we are on the high time frame, this isn't me saying that I think Matic is headed to zero, and that's usually the case with most of these shorts that I'm taking. They are trades for specific targets with specific invalidation areas or levels that I think that it makes sense to take based on risk reward. That's all they are, and I will adjust accordingly. But this is Matic, and this is ideally what I want to see on a lot of these alts that I'm targeting right now. A lot of unswept lows. You can see low, higher low, higher low, higher low. A lot of liquidity resting, and if we get a shift, or if Bitcoin takes the spotlight, then it's very likely that a lot of the money is going to shift from these alts into Bitcoin, and that's where we may get these sort of bleeds down, even if Bitcoin is going up, which is why I've shorted these coins. Again, it's a hedge against Bitcoin going down, and even if Bitcoin goes up, there's a chance that these coins still kind of bleed to the downside regardless. So it's a good bet to take when you're concerned about potential downside on Bitcoin, right? So that's Matic, and we'll update as things develop here. Again, a lot of this is going to depend on what Bitcoin does next. Does it make a move down to 62 to 63K? If it does, I'm almost guaranteed to be able to close these shorts in profit, whether that be halfway to my target or to my full target. Again, that applies to Matic, that applies to Solana, that applies to Link as well. So as Bitcoin develops, I need to adjust accordingly on these shorts, and I will do so. Let's take a look at the next one, Link. And here is Link, and again, Link is still at resistance. Link still looks like, honestly, like a juicy short to me. And again, I only say that because the high time frames look like they could do with a bit further of a correction to set up what would be, again, the same pattern that we're looking for on so many of these altcoins, except on Link, it's just much bigger of a range that we're talking about here. But again, the same idea, a massive accumulation zone on Link. That's all I think that this is. Okay, this is a prior accumulation zone. I think we tapped it. We just touched into it. I would have liked to have filled Link here. I didn't get a chance because it was so brief that we tapped into the zone, but we tapped into the zone. We saw an impulse, a move back down to this zone. So again, this is where I'm shorting. So a move back down to the lows of this range to either form a base here for the next impulse or even lower to this zone is perfectly healthy, right? Again, all we're forming is a much larger version of that accumulation bottom that I showed you guys on Bitcoin, right? And again, the idea is that Link has broken local market structure here. We have a point of breakdown. We have a clear, area where it makes sense, a low risk, high reward entry to potentially hedge or short or protect profits. And that's all I'm doing here, right? As these levels get invalidated, if they do, then we adjust accordingly. But for now, after I mentioned this in my last video, Link is at a 10-month rally to the upside, a continuation of a correction for maybe not even necessarily this. Let's forget about that right now. But even something like this, where we make a move back down to these lows and base out, that's very healthy. And that time-wise makes sense after a 10-month rally. And again, that doesn't look like much, but that is a 30% move to the downside, which is why I think it's worth attempting a short on something like this. Hey guys, I will add, you can obviously see that I approach these charts with a lot of thought behind the shorts that I take. Obviously, I adjust as price action develops. You need to be fluid, and please don't take these shorts. Don't copy me in these trades if you can't manage your risk, because as you probably have been able to tell from these videos, I do that. I manage my risk when I take these shorts to a point where it makes sense to attempt these things. If you're not managing risk, then none of this is going to make any sense to attempt to try. So every time that I share these things with you guys, I explain to you the logic behind why I'm doing them. I explain to you my areas of resistance, my areas of invalidation, why I'm entering these trades, where things start looking like I may be wrong, where I'm looking to take profit. These are all things you do before you enter a trade. Do not enter a trade unless you have identified your entry, your take profit level, your exit, your potential stop loss, your risk, the amount that you're risking. These things all need to be determined before you enter any trades, okay? And I'll also add, on a lot of these, I do have manual exits, meaning I don't necessarily have a hard stop loss, but I'm looking for conditions to change. And at that point, I may manually exit, right? And I can only do this because position size for me relative to my capital is small, which means I can weather a 5%, 10%, 15%, 20% drawdown if needed, right? So I'm not really concerned about short-term volatility or a big spike to the upside because I can handle that. If you can't handle that, then you need to reduce your position size or set a hard stop loss so you cap your losses and there's no question mark about how much you stand to lose on a position like this. But in any case, guys, as I've said, most of these corrections are just kind of midterm corrections, and ultimately we're looking for higher after. So keep that in mind if you're not a trader and you're just doing this to learn. What's coming after all these corrections is higher prices at the end of the day. Let's go ahead and now take a look at Pepe. Okay, guys, here is Pepe, and previously, as I shared on my Twitter quite a few times here, let's see if I have the squiggles that I shared, and we will pull out the lovely paintbrush, and this will show you guys. There you go. Okay, so this is the chart that I shared on Twitter when we were back at these lows. Okay. And I was calling for new highs on Pepe. Again, those of you who follow me are aware. And then I was looking for a move to the downside, okay? We have not gotten the trigger yet for this short. So I'm not short Pepe yet. The three shorts that I've taken have been shared on Twitter, but I'm holding off on Pepe because we're obviously seeing some strength here. But I want to emphasize, okay? I want to emphasize that there's a couple of things that you want to take note of here. This is the chart that Pepe has so far. And yes, we've broken above the range highs as expected. Yes, we haven't yet pulled back, but this doesn't necessarily mean that we're headed to the moon from here, okay? What we have thus far on Pepe, okay, above these highs is the same thing that we had at these lows. That is, thus far, this is certainly still possible that this is just a deviation, okay? It's exactly the same thing we got at these lows, a fake out to the downside before reclaim and push to the upside. This could certainly still be a fake out to the upside before a move back to the downside for that big drop that I was talking about, okay? So do not assume that because we're above the range that it's a free ride to a 10x, because I know a lot of people on Twitter are actively calling for that. With that being said, we don't have any sort of a trigger to short yet. We're seeing good strength on Pepe. On this push to the upside, this looks like an impulsive move thus far, okay? So it looks good so far, but do not assume that this is Pepe going another 10x from here, okay? I also want to point out, you look at the volume profile here. I've had some people on my Twitter talking about volume profile. I do look at volume profile, but the reason I don't pay as much attention to it nowadays is because I can honestly just tell a lot more just by looking at the candles and based on price action. Typically, you get high volume with impulses and you get lower volume with corrective moves. So a lot of times I don't even need to bother with volume profile. But what I want to point out here is that the volume on this expansion of the upside thus far is a fraction of the volume that we had on this expansion. Okay, this was an impulsive move to the upside, and you can see the volume reflects that. The volume that we have at this breakout thus far is a fraction of this volume. Okay, so again, don't assume that because we've now made a move above these highs, don't 100x long this. Don't long, don't leverage long this thinking that we're going to go 10x. We could certainly go higher, and maybe this is not going to be a distribution pattern forming, and maybe we are going to go significantly higher. But don't take it for granted. This is still well within the range of what could be a deviation. Now, I haven't shorted it yet because, again, like I said, on the lower time frames, this is pretty impulsive looking price action, okay? And now what's probably going to happen here is we can look at our side and we can see coiling here on the 1 hourly. Let's look at the higher time frames. We have daily that looks healthy. Let's look at the 3-day. Okay, 3-day, this is where we start to see potential signs of weakness. Between these two peaks, we have a higher high in price, a lower high in price. Now, some will argue that we're more than 14 candles apart, so it doesn't count. So let's go to the weekly. Okay, on the weekly, this still can certainly become, if we reject, we have 4 days before this weekly candle closes, okay? In the next 4 days, if we fail to push too much higher and we end up rejecting some here, we're leaving a big wick, and RSI fails to make a higher high, then we are setting up for a bearish divergence here on the weekly time frame. These types of high time frame divergences often signal larger corrections incoming. This is what we'd look for a larger correction to play out on Pepe. This is what I'm actively watching for. So in 4 days and 21 hours, when this candle closes, I'm going to look at RSI, I'm going to look at how the candle closes, I'm going to look at the lower time frame price action, and I'm going to determine if I think it's more likely that we're going to then reject and fall back in this range and fall down, or if we're going to break out. And again, hopefully, I get the chance to have a lower time frame clear entry on a short here. Okay, I don't have one yet, but hopefully as price action develops, we get some sort of a confirmation on the short entry. Your best confirmation, your most crystal clear confirmation is going to be a break below this level here. If Pepe moves back below this level and retraces the full impulse here, then we're probably seeing a shift in market structure, and that is probably going to lead to the breakdown that I'm looking for. Okay, until we get that price action, we sit on our hands and we wait. And when we get this, we take the short. We take the short when everyone's calling for a 10x on Pepe, because what we really have here is a deviation below the lows, a deviation below the highs, and a distribution range, okay? But until we get that confirmation, we avoid shorting, because right now this looks impulsive. Now, this is still my perspective for Pepe, and based on what I'm seeing, I still lean towards this being a distribution top. If I'm wrong, I'm zooming out, and again, this chart doesn't show all the price history on Pepe, so it's a bit misleading, because what happened before this that we have here, what happened before that is like a massive rise from close to zero. So you're not seeing months of price action here. And I showed the full chart on my last video, but you're not seeing the price action that preceded what we're seeing here. So there is a decent chance that we are seeing distribution here, okay? So that's Pepe. I'm getting a little bit hesitant to share my positions now on Twitter, because it seems like people don't manage their risk, and then when things don't go right, they tend to blame me. Even in this case, where all my short entries that I've shared are literally at entries or within 5% of the entries, I'm getting tons of hate on Twitter for these short entries and people blaming me for losses that they've somehow taken. I don't understand how they've managed to do that with the entries that I've shared. But the point is that I'm getting to a point where I don't even know if it's worth sharing these setups on Twitter anymore. But this is what you want to look for if the opportunity presents itself here on Pepe. And let's go ahead, and I think that covers most of it. We've covered WIF, we've covered Link, Matic, Pepe. Total 3. Okay, let me go over this real quick. This is the chart that I shared again in my last YouTube video, right? And we were down here at the time, and I showed you guys a squiggly that went up to the red zone, expected a rejection here, and a fall back to the green zone. This is the ideal scenario. Okay, because what follows this again is a monster rally to the upside. This is just a little bit deeper of a pullback than I think most are expecting. But again, what follows is a major rally to the upside. There's another scenario if we manage to get above this red zone, okay? And in this case, the shorts that I've shared with you guys would probably not work out, okay? In this case, we actually move up, we break above this level, establish it as support, and then get the leg up, okay? That's possible, but as it stands right now, this is the most likely place for alts in general. Again, this is total market cap of the top alts excluding Bitcoin and Ethereum. So it's basically alts excluding the two majors. This is the most likely place where most alts are at resistance. The most likely place for most alts to see a rejection and come to the downside. In any case, guys, this is still like very viable, right? We can't eliminate this scenario, and something like this basically just means memes bleeding, right? Or not memes, sorry, altcoins bleeding, including potentially memes. Doesn't necessarily mean Bitcoin and Ethereum bleeding. So Bitcoin could be rising, and as some of the money here, about 10%, 20% shifts to Bitcoin, that could lead to a bleed in these alts while Bitcoin rises, right? So this is about a 20% move to the downside, 25% move to the downside. Obviously easier if Bitcoin just dumps, right? If Bitcoin pulls back, then everything goes with it. And this makes a lot more sense. If Bitcoin is rising and this is bleeding, it's a little bit of a unique circumstance, special event. And I have a lot of people again on Twitter that are like, how can you say that these alts are going to go down when Bitcoin is rising? And I'll just tell you that I've been here for 7 years, and I've seen periods of time where Bitcoin sucks liquidity out of the market. That's just how it is. And you're going to get a narrative, by the way, for either one of these outcomes. If Bitcoin goes up and these alts are going down, the narrative is going to go back to what I saw earlier in the year, where it's, hey, the Bitcoin ETFs are out. Institutional money is buying Bitcoin. They're not buying alts. Obviously, alts are going to follow Bitcoin rises. We heard that for the longest time about the ETFs. And now that you see these altcoins or the memes pumping, people have forgotten about that. And now they're saying, well, obviously alts are going to be pumping. It's a bull market. So you're going to get a narrative to support either outcome based on whatever price does either way. And people are going to say, I told you so either way. All I'm saying is that this is still a very viable possibility, and you want to be mindful of this instead of getting extremely bullish at resistance, right? Other than that, guys, that pretty much does it for this update. It went on a little bit longer than I expected because I went into really great detail and depth about a lot of these coins. If you guys enjoyed this update, please like and share. I really do appreciate it. Leave a comment if you enjoyed it as well, and I will catch you guys in the next one.